Welcome to episode 1 of Everything ETFs. Myself, Spencer Invests, and Brad, the income architect. Guys, we are here. We have a great little roster of stuff we're going to talk about today, but I want to just check in, Brad, and see how you're doing.
I'm doing wonderful. It's a beautiful day outside, so I came
Beautiful.
outside to sit by the golf course.
Amazing. It's a lot prettier where you are than where I am currently. It's kind of gross outside
There
here.
you go.
Well, we've had a action-packed weekend. I mean, I like to unplug and not focus in on the news and everything, over the weekend, but too much has been going on. So what? We had our we had the capture of the Venezuelan president, an entire operation going in, capturing and bringing him. I think he's currently somewhere in New York, and I guess he's awaiting trial. And I'm curious, Brad, what you think that impact's going to have on the market as we've just started 2026, already an insane action-packed year.
So I'm with you. I did not expect to have to be doing any research about this over the weekend. Here it is. So Venezuela has heavy oil. The
Mm-hmm.
United States is set up for heavy oil, especially around the Gulf Coast. Our oil is considered to be heavy oil. We get into this. This is bad for China and it is bad for Russia.
Mm-hmm.
All right. Those two, China really was getting a lot of oil from them. And now that, hey, basically we're going to be in charge, that might change a little bit of aspects. It's just going to make it's going to make Venezuela more friendly to the United States. Now,
Mm-hmm.
I think the whole premise was we went in because of drugs, right? I think that was his whole premise. But let's face it, the oil is we're going to have downward pressure on oil costs. I think the target is around $50 a barrel. We're going to have new processing,
Mm-hmm.
for that little belt down there, and it's going to drive down inflation and fuel costs because the lower the fuel cost, the lower the inflation. It's all interrelated.
It's so interesting. And I mean, how is this going to affect Chevron and all of our fuel companies? I mean, if the cost is going down, if it's more readily available as an asset, I mean, if you're invested in something that relies on the price of oil per barrel to do well, we could see some downside, I guess, in some of these. And I've invested in some fuel stuff. I used to pretty often after the pandemic. I haven't as much recently, so I'm not even up to date with a lot of what's been going on. But it'll be really interesting how our economy reacts, especially when it comes to things like Chevron that even pays a small dividend.
That's right. I have my master limited partnership. I got the MLPI,
Mm-hmm.
like you do from NEOS, right?
Yeah.
I do have one very similar to that, MLPD from Global X. So
Yes.
I split between the two. And then I also do the one energy one from State Street. It does not
Mm.
have any MLPs in it, but it is basically on energy, and it sells some cover calls, and it's done fairly well, right? So, I think energy in a retirement portfolio, I did a video about this the other day. Energy should be, 4 or 5% of your portfolio in retirement. Everybody has their different. I think I read this over the weekend too. Is Psychology of Money.
Oh,
Every everybody,
phenomenal book.
yes, everybody's psychology of money is different.
Mm-hmm.
So just because you and I like a little bit of master limited partnerships, with NEOS in there, somebody else might not, and that's 100% fine.
Mm-hmm. Definitely. Yeah. Psychology of Money. It's like one of those books that kind of changes the way you see things for the rest of your life. And he's come out with a couple other books actually, and all of his books are pretty phenomenal. Morgan Housel, I believe, is the author's name.
Yes,
Yeah.
yes. So
Very
yeah,
solid.
another, it's something that I read. I mean, I just bought a new book the other day, right? That I'm starting to read, right? And I'll do a review of this, but it's one of those you got to continue to educate yourself, and there's nothing wrong with buying a book and reading what is going on out in the market and what others are
Mhm.
thinking. because just because you think of one way might not be how other people think.
Definitely. And you get a lot more exposure to so much knowledge, so many resources from people who have been in these industries and who know so much more of the background, which I think is really interesting. So has your take on specifically on MLPI by NEOS on your other MLPs, has it shifted with this news of the Venezuela, the president?
So so mine is I did a video on Friday. My 2026 goals are set for me as a retirement person,
Hmm.
and I'll have my complete portfolio out on Friday of where my targets are. My community already knows where my targets are. It's
Hmm.
just taking me time to swap funds over. I mean, I did 133 transactions on Friday.
Wow.
All right.
Wow.
Uh, let's face it, NEOS is still part of the core, right? TappAlpha is still part of the core, but I've moved away from, let's call it a little more risky. And
Hmm.
I came up with, I used AI and I came up with some percentages, and it told me, hey, you should probably have this much percentage in energy and infrastructure like that, or real assets. You should have a certain percentage in gold and silver. You should have a certain percentage in collars. And
Hmm.
it's basically collars could be replaced with buffered funds. And that was from a retiree's point of perspective. And my whole
Hmm.
comment at the end was, is if I was a young kid, I'd tell myself to go jump in a lake, because this is for retirement when you don't have time to recover. If you got 10 years to recover, yeah, I would be looking a whole lot more at different assets and asset classes. So,
Definitely. And that's why I think it's so interesting when we have these conversations, because that's kind of where I am currently, right? I'm a lot more interested in leverage. I think not a lot. I've never been super high risk, I will say. I like picking single stocks. I just do. I think it's fun to do the research and to track them, of course. But I mean, there's a lot of these primarily, RoundHill and Rec shares that are utilizing some leverage. Rex also has that options component to it for some income that I can then drip. But I think it's when I look at something like Nvidia, and I think, 10, 15 years down the line, do I think Nvidia is going to be bigger or smaller than it is now? I imagine the price will go up. And I don't think it's going to go up just a little bit. I think we're going to see some rapid growth, over the next decade. I just have to stomach the volatility that, ties in with that. And so that is the most difficult part. But I do think long term, especially for someone in my position where I'm not living off dividends, all of my dividends are reinvested 100%. Nothing is pulled out of my account. I'm like, well, I can sit on these and, take a little more risk. And, all the while still investing in some more safe, secure assets, the Qs, the S&P 500, maybe some Bitcoin, even though it's beaten down now, which kind of caveats into our next topic of conversation. I want to talk about Bitcoin for 2026. And what are your plans? Are you buying it for growth? Are you buying income funds like BITO, BTCI? What are you thinking of doing for 2026? And do you think Bitcoin's going to close higher at the end of 2026 than it is right now?
well, personal opinion, I don't care if Bitcoin ends right now, 2026 at $90,000. Don't care, because I'm making 28% with BTCI or thereabouts, whatever the percentage is.
Hmm.
Yeah. So I personally do not do anything. You mentioned a fund, BITO. I personally today don't do anything with futures contracts.
Interesting.
I've because there's Maxi. There's another one. There's Maxi.
Hmm.
There's one for uh those guys have one for gold that's 1.5% leverage, and it's done. That one's done outrageously good.
Yep.
Right. But you sit back and go, when that backwardation happens with futures contracts, and you can see this with BITO, when they went into crypto winter, their
Hmm.
distributions went to zero. There was literally months they paid you nothing.
And I mean, as someone living off this stuff, that is, yeah, terrifying. Man, I didn't realize BITO had fallen that rapidly.
Yeah, and it's on futures contracts, so you got to be So I try to stay away from future contracts. I try. It's just like I don't. I try to stay away from ETNs. I
Hmm.
try. Is there anything wrong with an ETN? Absolutely nothing. It's just how that my psychology is I want to see what they're doing.
Yep. Yeah, the
Right.
ETNs are scary too because what they can just like dissolve. If I'm not mistaken, like they can. Is it ETNs or is that closed end
So
funds?
so an ETN. Well, it depends on how it's structured. It's like JEPI and JEPQ put their calls into an ETN, so
Hmm.
you can't see them.
They
But we
hide. Yeah.
we know that's the best part is we know institutional investors can see them
Hmm.
because when you write $16 billion worth of call options on the NASDAQ, yeah, don't think people are going to know, oh, JEPI just, or JEPQ just wrote their options,
Yep.
right? Yeah, just saying, yeah, when you're writing 16 billion or 30 billion dollars of option contracts, you're going to get targeted. They're going to know who it is.
Yeah.
Right?
Uh,
My problem is I don't have any kind of real tool to go look at all those different options. And then again, do I really care? I mean,
yeah.
we can look at JEPI and JEPQ and just say, decent funds, but I can list off a bunch of funds that do better.
That's the thing I think is really interesting. I'm prepping a video that I'm going to film today. Actually, I think I'm going to do 15 or 20 income ETFs with zero NAV erosion, and so I put all these into a calculator. I've been tracking the performance, and JEPI and JEPQ underperform nearly everything. I think JEPQ was the worst performer of my grouping of the Nasdaq ones of the Qs because what we have GIPQ, we have QQQI. I didn't put IQQQ in there by ProShares, but yeah, it was underperforming. And then TDAQ is still so new; it's hard to compare. But okay, QQQ by Curve. I did QDVO as well, even though it's not specifically, I believe,
That's right.
the Nasdaq. But yeah, I was kind of surprised because there is a pretty diehard community. I mean, JEPI has, I think, like 41 billion in AUM, something along those lines.
Yeah. It's and JEPI does do better slightly in the down market, but my comment is okay, I'll take QQQH. Do you have total return chart?
Let me pull it up. Let me but yes, I can. Let me slide it over. Yeah, because are you wanting what, the NEOS hedge funds?
Yeah, do QQQH against JEPQ
I never even
or
thought about that. Because I don't
JEPI.
hold. Let me throw all of them in here actually. Let's see. We'll see if we have any technical difficulties with no, here we go. Total return. I mean, price return wise, yeah, QQH already does better, but interesting.
So here you have downside protection
Mm-hmm.
availability, and you can actually see that downside protection actually occur,
Yep.
right? During that time period, and it's doing just as good as JEPQ.
Yeah. Wow.
Yeah, so you sit back and go, for a retiree, I'm adding QQQH to my portfolio this year,
Yeah. And I
right?
mean, the
Yeah,
yield's
not a
pretty
huge
solid,
part.
right?
Yeah, it's about 90% now. So they changed it in February because QQQH used to be the old NUSI fund from Nationwide,
That's what it is. Yeah.
right? And they changed it in February, and it has been about 9% since February.
Mm-hmm.
So so my portfolio, and so I was doing about 17%. My new portfolio with the changes with some collars on them is
Mm-hmm.
like 15.2. So yeah, I'm taking a little bit hit on yield, but I'm not chasing, I'm living on 8. 15 is still in
It's
my book
plenty.
is still
Yeah.
greater than 8.
Yeah.
right? So, a 9% payer with some downside,
Hmm.
and that's just because I don't have time to recover.
Yeah. Yeah. And I mean, there's such cool assets that no one really talks about. I've made some videos on it before, but they don't have the popularity because most people I would say are bulls.
Y
Or just
well, if I was Spencer, I wouldn't buy this.
yeah.
I mean,
And
this is
I
thi
don't hold either of the H's.
yeah, yeah, and by the way, I did not buy SPY-H. I
Really?
had I did, K K whew, KHPI?
Let's throw these in here.
Yeah,
Interesting.
so I did KHPI, and just to give you and that's KHPI is on the S&P 500,
Mhm.
but, KHPI, I've had the fund manager on the channel, does quarterly collars,
Mhm.
and they do, call spreads on
Mm.
SPX, right? And they go after a different percentage of where the market goes, where something like SPYI is getting capped,
Yep.
that's actually when their fund's winning
Interesting.
because
That's
it affects differently the market how they do it with call spreads.
mhm.
And the guy was very nice. He shared a 10-year back test with me.
Really?
Yeah, it's on Mercube. You could
Mm.
literally go to Mercube and bring it up and do a 10-year back test. If you don't know, Mercube has a 20-year back test on SPYI.
Wow.
All right. So, there's no reason to guess what SPYI would have done for the last 20 years. There's literally a back test done by a third party that shows you what it.
Mhm. Does the back test include dividends reinvested?
Yes, it's total returns, and they have to get the actual how the options were going to be done. So NEOS had to share with them
Mhm.
their strategy, and then they went back and back tested that information.
Interesting. Oh, that makes sense. Wow.
Yeah. So yeah. Since I've been talking to some of these fund managers, Mercube has been doing some of this. Mercube, we'll just bring this up. Mercube is the one that put together. Correct me if I'm wrong. MLPI for the index that NEOS is following for their master limited partnerships. So I know NEOS is at least teaming up with them to do different things. And this fund, KHPI teamed up with them to do the third party backtesting.
Wow.
It's a 9% payer, right? It's no earth shattering, payment there.
Yep.
But if we do a downturn, they got the collars there that's going to protect really protect your NAV. I
Yeah.
mean, if you just do price return, you can just see you can just change that to price return.
But yeah, I'm thinking I also need to change the date because it's April 4th because it's giving SPYH a better return because it started at a
A different date.
lower point. Yeah, there we go.
Yeah, but if you do price return, it's just flat. KHPI is just flat. I mean, and
Yeah.
that's exactly what the fund manager said. We'll be very flat, but in a downturn, don't expect to lose a lot of money.
Yeah, and that's amazing for someone in your situation that yeah, you're relying on that income.
Yeah, last thing I want to do is see, $70,000. I think I think during the April, I saw my account balance drop by $70,000.
Wow. Wow.
Right? I mean, it was part of the market, right? It was just how it worked. Now my account balance is above where it was then,
Mhm.
but I saw my account balance, and that's as a retiree, it's a different psychological thought. So
Yeah, it's really interesting, and I'm curious, Brad. I want to throw a question your way because not a lot of people can say that they've seen that. You've built a very impressive portfolio. What do you do mentally to stay sane in those moments when we see pullbacks like that and we see crazy volatility in the market? What do? Are you trying to reinvest? Are you one of the ones that will just no longer log in and check it for a couple weeks to a couple of months? What's your play there?
I lay down in the bed, curl up like a little baby, and stick my thumb in my mouth.
I'm gonna remember that one because I may need it one day.
So, actually, today, because I'm so diversified, I just don't have that. I don't have that fear anymore.
Hmm.
But I did. That was exactly how I felt when I rode crypto winter down with BITO.
Yep.
I said, "Oh, I'm going to have to work forever. I will
Yeah.
never recover from this."
Yep.
Was my thought process. And not only did I recovered enough to be able to retire early.
Yeah. Amazing.
And that's where you sit back and go, you know, in today's world, I think we need to look at cryptocurrencies not just as a get rich scheme, because NEOS came out with the new fund and NEHI.
Hmm.
I know it's too new, but if you buy it at the right price point for Ethereum, then this
Then
might be
yeah.
something that we look at, because yeah, and I'll just share some of my research. So Ethereum, is the layer one, and it appears that BlackRock and some of the other major players are building out their systems on Ethereum.
Hmm.
So, right. So BlackRock being so big, you just sit back and go, all right, I know that, maybe I should have a little bit of NEHI. And as a retiree, not everybody can do that. Not
Yeah.
everybody's going to be able to stomach Ethereum dropping by 50%.
Yep.
But then again, that's why it's only, a 0.5% of my portfolio.
Hmm.
It doesn't even rank to get a full percentage point, right? But it's a 36% payer.
Yeah.
And then I
Really? Okay.
also, yeah,
So it is higher implied volatility asset than Bitcoin.
yes,
Ethereum is
yes,
substantially. I mean, because what BTCI is 26 to 28%.
that's right. And here NEHI is going to be, in that 36% range.
That's crazy.
All right. And then you have my second one that I chose was Solana, and that's SOLM.
Hmm.
And I chose that one because Visa is building out on Solana. And there's some other stable coins and other stuff that's getting built out on Solana. But, I really looked at BlackRock building out on Ethereum and Visa building out on Solana. Those are my two picks. All right.
Mm.
I had XRP. There's one on XRP, and these are by Amplified.
Hmm.
All right, because I also have IDI from Amplified. It's a small holding, but it falls into that, same as NEHI from NEOS.
Hmm.
The difference, I guess we should go. So the difference between what Amplified does and what NEOS does is Amplified writes their calls weekly, and NEOS does that 7 weeks out, rolls 3 weeks before expiration.
Hmm.
So it gives me, it's the same asset. It just gives me a different play on the options. And we talked about the skewness of options.
Hmm.
Is it the longer options that are the winners, or is the shorter options the winners? Well, I'm not picking. I'm picking two different funds that run it two different ways.
Yep.
All right. So
Yeah,
yes,
it'll be an interesting year for crypto, and
yes,
I'm really excited. I mean, we talked about this in Costa Rica, the Quantify fund that's going to be holding these what, the top 5 altcoins or including ETH and whatnot. So it's going to be what?
Yeah,
Ethereum, XRP.
that one I might not jump into, but and that's because
Yeah.
of me, right?
Yeah.
I think the quantified funds that I'm looking for is the one on gold and Bitcoin
Yes.
that's going to pay income,
Yep.
and then the one that's on the S&P 500 in gold.
Yeah.
Uh, and I forget the wisdom tree GDE or something like that from Wisdom Tree.
Mm,
It's been out like 3 or 4 years. It is a 100% stock, 100% gold, just like what David is going to be doing from
mhm.
Quantified. It has no income,
Interesting.
uh, but it's up like 290%. It's
Oh
just like
man.
it's one of those. Okay, it's not so much a income fund, but let's put an income overlay on something like this, and I get excited because it clearly has done better than gold or stocks.
Yeah. My goodness. And we can actually let's take a look at it.
Was I close with the letters?
You were right on. Yeah.
My problem is I'm sitting outdoors with my coffee cup. So, so
Yeah, so let's look at we're going to add total return. And let's see. So it is total return versus it's saying that I don't know why it's including anyways, total return, yeah. Just on the 1 year up almost 74% on the 3 year.
yeah,
Wow.
yeah, yeah. So okay, I want a fund like that. Give me an income fund.
Yep.
And that is what Quantified is going to put an income fund on.
And I think, Brad, I think this is so interesting because we've seen a crazy pushback from these ultra high yielders. We've talked about this, but I think what a lot of fund companies don't understand is that it's not just the retirees that want that consistency and the consistency of the NAV. I don't want to see my NAV eroding. I don't care if I genuinely don't care if a fund is yielding 70% annually. If my over even if I'm losing 50 to 60%, even if I have drip on, there are so many factors that weigh into that because I'm lazy. I don't want to look at my portfolio and see a ton of my numbers deep in the red. Even from a mental perspective, it doesn't make sense to me, even if I am yielding something super high yield, because yield varies. Things
So
can change, you know?
you're in Seeking Alpha, correct?
Correct, yeah.
Bring up Tesla. Go to dividends.
Where is it? Oh, here we go.
Go to dividend yield.
Yeah,
Just go to the dividend yield. Scroll up. Says dividend yield, second row. Scroll down a little bit more. Yield on cost.
yield on cost.
Sorry, guys, that is not what you want to see.
It's not. It's genuinely not, and I've been tracking Tesla since it launched. Some of my first videos on the YieldMax, you can go look on the channel. They were from so long ago, yeah, 2 years plus, and it's just
You
crazy.
do not want to see a yield on cost looking like that. And
Yeah,
you
wow.
and you can start going. That's an easy tool to get a good estimate. Is look at yield on cost. I mean, type in SPYI. I mean, let's not just talk bad about Tesla, right?
Yeah.
You can see that they're very flat and steady.
Yep.
That is something I'm a whole lot more interested in. Just you know,
Yeah, I mean, even with the drops, it's still not that much of a difference. Not even,
yeah.
maybe a percentage.
But it's they pay 12% and it's above 12% yield on cost.
Yep.
All right, so you sit back and go, that is what I'm looking for.
Yep.
That I just use that yield on cost as a quick. How does it look? Is it
Mhm.
a Is it trending downwards? Well, maybe I don't want it. Is it
Yep.
trending sideways or up a little bit? Okay, maybe that's something I should look at. You
Yeah.
know,
I've
it
never
has been
used this from Seeking Alpha. That's really cool. I didn't know they had this on here.
it's just one of those tools that maybe not everybody knows it's there, and it's just one of those, hey, I look at it going, I want to stay away from NAV erosion, and that's a great tool to see how you're doing for NAV erosion. Right? I mean, you
Mhm.
can let's do another one. Let's do XDTE. Yeah, it goes down. That's
Yeah.
sorry. That's not not what I want to look at.
Yep.
Do I think it's a bad fund? No, I do not. I absolutely do not think it's a bad fund.
Mhm.
But I don't want to see yield on cost going negative.
Yep. I wanna see if how QDTY compares because these YieldMax, the 0 DTEs, mm,
Yeah.
have been interesting. I mean, a little more consistent once we get it hasn't been out for nearly as long as a lot of the others, but yeah, still.
Well, do TSPY. Let's put them to the test. Let's, you know, yeah. He's fairly consistent.
He
If you
is.
look back at the beginning to
Yep.
where he is now, it's right around the 14%. Very
Yeah,
flat.
14, yeah, just not even a 0.5% lower, 14 to
Yeah,
13.
yeah, very flat.
Yeah.
I'll take flat every day of the week.
Yep.
I do not want negative.
Yep.
That's all I'm asking for.
And we're seeing a crazy mix where I think investors are like, it's like everyone all of a sudden saw this chart and realized how crazy it is that your original capital is eroding over time. And people went, oh, I'm done with this. I genuinely think that if not for MSTR's success, YieldMax would not be anywhere near what it is today. I think people saw the MSTR, MSTY fund doing so
Yeah,
well
yeah, yeah.
and threw everything into everything else YieldMax, thinking they were going to do the same, not realizing that MSTR's underlying performance is what moved Misty to be their best performer. So
Yeah, so for 2026, I only have 2 funds from YieldMax in my grouping. I got rid of everything else.
yeah.
I have Soxy
Hmm.
and I have Chippy, and that is my bet on semiconductors.
Yeah.
Uh, I used to be a big AI and all about AI, and I still am. I think AI is still the way of going. I think we're still early,
Yep.
but I'm looking what is funding AI, and I do believe what's funding AI is something like Soxy
Yeah.
and Chippy, right? I mean, you can just see it and just say that fund hasn't done that bad. I think that's an okay fund to have,
Yep.
right? And do Soxy against the Qs or anything, right?
Oh, yeah. Let me switch. Let's see.
Yeah.
Wow.
Okay. Well,
I didn't realize Soxy was doing that good. That's insane.
so
Yeah. That's really impressive. Wow.
we were in New York together, right? And
Yeah.
the gentleman that actually hit the button that at the closing bell,
Yeah. Yep.
yeah, I don't even know his name. I
I
couldn't
don't
even tell you
either.
his name, right? But he wouldn't tell me much. But what he would tell me when I asked him, I said, "Well, what do you own?" He owns Soxy.
Really?
Yes, that was his pick. He didn't know he didn't own the single stocks, but somehow he owned Soxy, and he was there ringing the bell for YieldMax.
Yeah.
Yeah, that was a clear sign of the 12% payer, like Soxy is something that maybe you should consider. And
Yeah.
that's my play for 2026. I think that's a good. And I'm looking forward to. And we haven't brought into this segment, but I'm looking forward to something that's on what is feeding AI. So no
Hmm.
longer, NVIDIA single stocks. Yeah, I think they're
Yep.
going to feed AI, but what is feeding it? What's the tiers? So like nuclear power.
Hmm.
And I think that as a growth fund, I think nukes, NU.
KZ.
KZ might be a fund that you might want to look at. It has uranium in it, right? I mean, I think that's something that you should be considering.
And I actually did an interview that we'll put this one up against, the uranium nuclear ETF, and I mean, it's amazing. I don't think they pay any distributions, maybe a little, but what's amazing with this one too is just like you said, Brad, because this is our next segment. We'll do 3 ETFs each for 2026. Not necessarily that we own already, but just 3 we're interested in, excited to watch, and potentially will own. Because Nukes is on my list for sure, because I am looking for more exposure to the AI run without having to invest in just Nvidia. With absolutely every ETF you buy these days, everything seems to just be
It,
Nvidia or
or Palantir. You got
Palantir.
Palantir,
Yeah,
Nvidia. Yeah,
the
it's
Mag
always seems
7.
to be.
Yep.
You just sit back and go, what is that layer underneath that's going to be supplying these guys at chips? Let's play all the chips. MU, let's play all the chips out there.
Yes.
All right. And then there's going to be a fund from
Did you see MU's price? Sorry to interrupt you, Brad. Did you see
yeah.
MU? Holy smokes, up what, 10 or 11% on Friday?
Yeah, well, that's how it is, man. Come on. You don't own MU? this
I mean, it's not even gonna let me compare it on here. Let me see. I just want to look at the chart because I mean, holy smokes. Versus the
yeah.
S&P 261%. And again, it jumped big over this
So so
weekend as well.
I'm looking at chips. I'm looking at nuclear power for generating for AI.
Mhm.
Uh, I, what other services is going to be needed for AI?
Mhm.
And looking at those type of, instead of just having Palantir, Nvidia, and the rest of them, right? Have a
Mhm.
basket that's going to do this for me. So David Nicholas is going to come out with one on nuclear power.
Really?
I can talk about it because the prospectus is out there. You can go
Yeah.
find it. It is, I don't know, maybe another month and a half away.
Mhm.
I'm just afraid that let's throw it out. I'm afraid that he's going to shoot for too high of a percentage.
Yeah, I feel the exact same way for what we've kind of seen with blocks, and we've seen the price fall rapidly, and they're not really protecting the NAV,
Yeah,
like I'd like.
Blocks is Blocks is a good fund. It's an interesting fund. I think it has potential.
Yeah.
But at the end of the day, I'm happy with 12 to, you know, something like Blocks. Maybe it would have been better at 24%.
Yeah.
Their fund GIAX, I think that should be a 12% payer.
Yeah.
If it was 12%, not 24%, I bet the NAV would go up.
Yep.
I mean, that's what I'm looking for. Give me a 12% payer on nuclear power,
Yes.
on uranium. I mean, I know it can be done. I mean, they're paying me 12% on other stuff. I know it can be done on that stuff. So pay me
Yeah.
something more reasonable, right? And I think that's the whole gist that the marketplace needs to come around to, right? I mean, YieldMax came out with their 25% payers.
Which we never talked about this, Brad. We probably should do a full episode on YieldMax. We can get into it a little bit. This is kind of funny because I feel like it's really contradictory for YieldMax because the name YieldMax is they're paying you out the maximum amount they can. And with that strategy, there are flaws like we've seen when it comes to NAV erosion. So
Mm-hmm.
now they're kind of flipping the script though. And now they're saying, oh, we can create funds where we don't pay out the maximum amount of yield, but they're not going to transition any of their other funds to that format, which I
That's
know
right.
is kind of a gray area because some people probably like NVDY and MSTY still. They're not
Eh,
interested in holding a target 25 fund.
let's throw out one that we're talking about my target, things that I'm interested in for 2026.
Yeah.
Granny, GRNI.
Oh yeah.
First thing that you saw, it was a total fund. So you know who's writing the options on it.
Yeah.
But at the same time, it's based off of granny shots, and it's
Yep.
only a 9% payer. 9-10%.
Yeah.
Okay, with what they own with Amazon and Microsoft and all the stuff that they own, they will easily be able to pay out 9-10% without struggling at all.
Yeah.
So you sit back and go, they can do it. I know that they can do it. And Granny is one that's it's interesting to me. I think I'm taking more of a slower approach into 2026.
Mm-hmm.
I think that we have a good group of funds that are already established,
Yep.
and I'm slowing down, my pace of new funds. But Granny is, something that I'm interested for 2026. I think Tom Lee has done a good job, and I'm just going to sit back and watch this one and see if it's something that I will, you know, uh, make it part of my core, right? I got
Yeah.
KQQQ, I got QDevo. Does
Mm-hmm.
does Granny deserve to be in that core group?
Yeah. Oh yeah. And that jumps into my next. I mean, we've talked about this one quite often, but one of my biggest choices for 2026 is BTGD. And I'm looking for a Bitcoin play as well as gold. I currently own gold and silver. I'm more invested in silver currently than in gold, but I love the idea behind BTGD, which is, again, it's 100% staked Bitcoin and 100% gold. And again, you have the leverage component, which I'm big on. And even
Hmm.
though this is, I would say it's a riskier fund. It's one of my riskier holdings because you do have Bitcoin. You also have gold to kind of counteract that. And the long term performance of gold was lackluster until what, a year or two ago. Zooming out, we can see. I mean, this is against the S&P 500, but with
Put G
gold,
put GLD in.
yeah, good idea. I don't. The one thing I don't like about Seeking Alpha is I have to jump back and forth. And we'll do GLD because I can't compare. Maybe I can. I've just never done it. Um,
We'll talk about that off screen, how you can do that.
okay.
We'll bring you up to the old man speed. you
Here we
know,
go. We'll do. Yeah, BTGD hasn't been out for that long, for 3 years. But gold. I mean, yeah, gold. Even on the 5-year chart, gold was lackluster from what,
yeah,
2020 until
average, flat.
2024.
Yeah, that's right. And mine is hey, I'll take it like this. I'll take 12% off of gold being flat.
Hmm. Yeah,
I mean, that's my conversation, right?
hundred percent.
I'm not trying to guess if gold's going to go up or gold's going to go down.
Hmm.
I think gold, if you go back to 2008, compare it against uh, the S&P 500, you would want to have held on to gold,
Hmm.
right? You don't, that is where, some of that flight to safety, right,
Hmm.
would have been. Yeah, so I think that's going to be in it. The one that's on that and the one that's going to be on the S&P 500 and gold
Yeah.
is my play, and I like how they're just going to rebalance it for you. I mean, they're going to rebalance it every time it's I think he said 3 to 5% out of balance. They'll
Yeah.
rebalance it for you, and that's just awesome.
It is.
It takes the burden off of me to sell some gold and buy the S&P 500, or sell
Yep.
the S&P 500
Buy
and
some
buy
gold.
gold. It
Yep.
it does the balancing for me automatically.
Hmm. Yeah, I love that. So, Brad, you've given us two picks. What's your third choice for ETF in 2026? Growth, income, whatever you think.
So growth or income, I am going to stay with the chips. Did I say Soxy already? Are you counting that as one?
Sure. I had, what was it? Soxy GRNI.
Okay. So now you're going to hit me up. My third one is going to be the nukes that's going to be coming out, nukes, and then David Nicholas fund on nuclear power.
Yeah. That'll be a
I
really
think
interesting one to watch. I mean,
I think that's going to be an interesting one because I'm going all over those themes. I'm theme oriented, and I think that's where my alpha is.
yeah.
I think if you really want to get into, I think the alpha in 2026 is going to be crypto.
Yeah. Really.
Yeah, I think that with the liquidity cycle being slower, we
Mhm.
didn't see the liquidity in 2025, and they started pumping liquidity into the market December 12th, something like
Mhm.
that. I think that you're going to start seeing crypto with the liquidity cycle start to go up.
Yeah.
And again, I'm not betting the farm.
Yeah. Oh yeah. That's an
It,
important thing to state because people, just because we're on here on YouTube talking about stuff doesn't mean you got to go all in when we say we like,
yeah.
one
Oh, yeah.
sector or
None
something.
of this is financial advice or any other
None is
advice.
financial advice ever.
Two guys sitting here talking about it. And
Yep.
yeah, I think that they deserve to be a small portion of your portfolio.
Yeah.
Yeah, nothing large. And if you're younger, maybe it's a larger percentage. If you're
Yep.
older, maybe it's a smaller percentage. There's no reason for a 90-year-old to have crypto in their portfolio.
Mhm.
They may or may not live long enough to see it go up.
Yeah. Yeah.
You
Yeah.
know, so it's always interesting how that plays out long term for everybody. I mean,
Yeah.
I think crypto is something that we can't just ignore anymore.
Yeah.
It's
I
becoming too
I agree.
mainstream.
I agree
Yeah,
fully. Yeah, and that throws me into my last selection. It's kind of tied between I'm probably gonna bank pretty big on both RoundHill and Rec shares this year. I like the different strategies. I like the leverage component. I know you're not the biggest fan of RoundHill, but I tracked, so Brad, what I did was I tracked all the weekly payers and I've been doing a bunch of videos on them because it's the end of the year, right? And I've been pulling up the best performers. Top performer, not surprised, PLTW. But what was really interesting is I think three of the five best performers were those Roundhill leveraged funds when it comes to the weekly pairs. You had GOOW, which I'm also pretty big on for 2026. I think Google, I mean, they own YouTube. It's a powerhouse. There's so many different industries tied into just Google, and then I put NVII up here as well, which was beating GOOW for a period of time and then has actually kind of slowed down a little bit here as we've seen what we saw Nvidia pull back a bit. Now these two I think are going to be, again, powerhouses going into 2026 and throughout 2026. So I'm probably going to choose both of these for my portfolio. Maybe I'll do some tracking content on them as well, but I'm really interested if we do see Bitcoin pull back to 70,000, 75,000. I think I'm going to scoop up some, let me put them up here. Some MSII, some I mean, what, even maybe some MST. MST is super leveraged. So I don't.
I'm just rolling my eyes. I'm just gonna go ahead and call it a day.
But see, check this out. Bear with me. Bear with me.
Yeah, yeah,
I
yeah.
know.
You're gonna invest in something like that. I'm just gonna just shake my head.
See, but here's my take. I wouldn't do MST because it is over leveraged. I don't want 2% on MSTR because I mean, look at this.
I'm
I
just,
don't know if MST can even survive with,
it'll do a reverse split.
yeah. And then once we get on that train, they're gonna just keep doing that.
Yeah.
Super weird for Defiance to throw out one fund like MST. That's why I like Defiance funds. I think WDTE has been solid. I think their weekly payers are pretty solid. They're not the worst
Mm,
performers. They don't
I
get a
just
lot of love because,
no, no, no,
they're nothing
no love,
special.
no love here from Brad.
Yeah. They
it,
really are nothing special. I will say that. They're usually pretty lackluster, especially when you compare them to the underlying with the options they're writing. They have some
yeah.
improvements to make. But why would
And
they
put
just
it like this, I'll take a round hill over a defiance to start throwing out.
Yeah, I think that's pretty
And
we
I
have to
think that's
do
saying a lot from Brad.
we have to do that. We have to rank these ETF issuers, Brad. We got to do our different scorings and see what we think and what people, compare them to. But I do think it's interesting. If I was going to go, I mean, MSII has held up the best. But again, this is super dependent on what Bitcoin does. If we see a reversal, and we have seen them flatten out. I mean,
Hmm.
the last couple months, maybe a month, really, nothing much more than that. So that's why I do think we could see a little bit of a reversal. Again, I wouldn't bet anywhere near the whole farm on this. I'm talking, again, half a percentage on split between, two of these. MST's too leverage for me. MSII is better because you have the distributions coming in a little more consistently, I would say. Um, but I might. This is like my wild card for 2026. We may come back in a year after a year of doing the podcast and I'll go, Brad, I told you, look, MSII, I'm up 60, 70%. Look what we could have done.
Yeah, that's okay. I'll just stick with my boring BTCI.
And we may come back and I may be, Brad, you were right. I lost it all with my
Yeah.
investment in MSII.
How,
Uh,
how, how about I do have Troy on this week from
yeah.
NEOS.
Yeah.
Uh, there's been some negative articles on Seeking Alpha about QQQI recently.
I've seen those.
I was very vocal, right? I even invited one of the authors onto the channel with Troy to actually say, is what this guy's talking about? He of course chickened out.
100%. The Seeking Alpha writers, and for those that don't know, they're not paid. They're not paid writers. These are like, and there are some phenomenal Seeking Alpha writers out there. I'm not saying they're all
But
bad.
they do get paid.
They do get paid. I thought they did
They
not get paid.
they get paid to write those articles. The other one is both of the articles that came out that were negative about QQQI.
Mm-hmm.
They both also were leaders of the groups. So, to promote their investment groups.
Oh yeah.
So, I just sat there. I prefer the guys that are not associated with the group.
Yep.
Right.
Definitely.
And I still read Stephen Barbaria's stuff from the Income Factory. When he posts out there on Seeking Alpha, I think he's worth the read. I think
Hmm.
Nick is worth the read. Kevin, I forget what Kevin's last name is he's worth the read. And I'm looking at Seeking Alpha and wondering, with some of these articles, because it did raise some good questions. It
Hmm.
did raise some good questions for Troy, and they will be the first questions I ask when he's on the channel. Wednesday's going to be on. I think
Wednesday.
the video will be posted Thursday. Give me time to edit. But,
Hmm.
I think that there were some good questions that come out of those articles that maybe somebody needs to ask the fund manager. But to say that, hey, you don't want to talk to the fund manager after you wrote an article, you're just like, you should have
Bashing.
talked.
Yep.
Maybe you should have called and talked to the fund manager before you wrote the article.
Yeah, before we started just saying whatever, and that's the problem I've run into with some of those authors is like, guys, Google is free. How are they pulling up information that is so unbelievably wrong? And I'm like, who even? I mean, I think some of them do it for clicks, 1,000%. I wonder, if they get paid a commission based off reads. I'm sure there's some,
And they do.
format to that.
There's something, and I've looked into it, and it's not worth my time.
I thought about it, Brad. I was like, you should be writing some of those articles. You know this stuff better than what 90% of the people that write for Seeking Alpha, somewhere around there, I'd estimate.
I think there's people that know closed-end funds way better than I do because I just
Yeah.
don't cover them. I think everybody has it. It gets into psychology again,
Hmm.
right? But when you start talking about when NEOS rates at the options and you look at the options and then you read the comments that they probably wrote these options last week, and I'm like, last week? No, they did not. They rate them on the same day every single month.
Oh
you know
man.
And if you don't know that basic fact
Mhm.
about when they wrote the options, you just shouldn't be even opening your mouth.
Yeah, what are you doing writing articles on these things? It's just crazy.
And one of the authors, I made a comment, and one of the authors had me post a link to a video and actually thanked me for the video, saying, I learned more about these watching your video when how they wrote the calls than any research. He was like, wow, I've been doing a video almost every month, and that's going to be this week's video
Mhm,
is I show the calls for NEOS every single month because they wrote the calls the other day.
mhm,
So I actually know exactly how much income they made from their options trades.
mhm.
There's no question I know what it is because literally I downloaded
Data's
the
right
sheet,
there. Yep.
right? And then I sit back and go, because I looked at QQQI and I said, oh, they didn't quite make the full premium on all their options to,
Mhm,
to make the to make the distribution. And I thought to myself, maybe these authors are right. And
mhm.
then I looked at how many millions of dollars of cash they had sitting there, and I started laughing,
Yep.
going, okay, they need 80 million to make the distributions, and they have $100 million in cash. And then I said, and they're getting 3% on that cash. You have to add that in,
Yep.
right, into the calculation. And I'm like, okay, that's a little bit closer, but it gets into that. You don't always believe what you read, and don't always believe what I even say. You should do your own research. I mean, but I
100%.
I literally show the calls and say, here's the calls.
Yeah.
You can download them on the first of every month, just
Mhm.
like Brad does. I
Yep.
mean, January 1st, I downloaded those sheets. Just better yet, December 31st, I
Yeah.
downloaded the sheet and saw where the calls were and what the options were worth
Mhm,
before they rolled. And then I downloaded them on December or January 1st
mhm.
because they had to pay to close and then, sell to open. So I know what the differential was between the two, or approximately. I mean,
Yeah.
neither one of us could know exactly,
Mhm.
but I know what the published data tells me what it was.
Oh, yeah, it'll be interesting. I'm excited for your video with Troy to come on and talk. That's definitely gonna be
Yeah.
top of my list priority of stuff to watch. And so rolling into 2026, Brad, we'll do our final question. What is your take on the overall market performance for 2026? Are we gonna see it outperform 2025, or do you think it's going to underperform?
It's a mid-year. I think that we're gonna have some type of drop,
Mhm,
and then we'll see, an end of year rally around mid-year elections,
mhm.
and I think that we end up for the year, but it's not gonna be a smooth ride getting there.
Yeah. That's very similar to my take. I do think we're gonna see a bit of a bump. I don't know how the world's going to react to the news with Venezuela and whatnot, but I think as things settle down, we could see a bit of a run in some sectors, could boost the market up a little bit. I do think we're going to see a pullback in crypto early on. I would say probably March to April is when I'll start buying crypto,
I
depending on how
I
far it
think
pulls.
I will fully disagree with you on that one.
Really, you think it's going to go up earlier?
I think that them pumping liquidity into the market early,
Hmm.
we're already seeing Bitcoin. What's Bitcoin? 91,
91.
right? It's already up so far
Do you
this
think it?
year.
Do you think it reaches the 80s in 2026?
It could always, it
Who knows?
it could hit the 70s, right?
Yeah.
Yeah, and that's why I like the exposure to Bitcoin with BTCI
Yep.
because I don't have to guess where it's going.
Hmm.
All I got to do is collect the income,
Yep. And hold
and
on.
then yeah, and then hold on for dear life, hodl, right? And the comment is this: hey, maybe with crypto, maybe you don't reinvest until it's 10 or 15% below your cost basis.
Yeah. Yeah.
Yeah, I have that rule that, hey, I did 3.5% on the stock exchange. So
Mhm.
my QQQI, I don't reinvest back into it unless it's 3.5% below my cost basis.
Yeah. Yeah.
Well,
It's a solid way. Yeah.
yeah, well, and that's just for me. For younger, just drip, go, right? You got time to recover.
Yeah.
For me, I'm just trying to buy the dips, and for me, buying the dips is below my cost basis.
Yep. I love that. That's really solid. Well, this was amazing, Brad. Episode 1 is in the books.
And I'm really starting to think maybe I just come out here and sit by the golf course every time, but
100%. Yeah.
I won't be here for the full year.
True. You'll be traveling, which I mean, changing scenery is never a bad thing. So yeah, whatever you feel, it's gonna be fun. I mean, quick touch on the goals for the podcast. We want to keep having these conversations. We want to keep, talking about the news, what's going on in the world, how it's impacting the markets, and continuing to see, track new ETFs, old ETFs, compare them, so on and so forth. And what's our goal? If we want to say 1,000 subscribers by the end of 2026, should we go up to 3,000? What do you think?
Uh, who knows? Let's see where this takes us.
We'll see where it takes us. Awesome.
It's just like the market. Who knows?
It's just like, yeah, hold on for dear life.
That's right.